Hey everyone. One of the commercial real estate trends capturing broad-based attention is the dramatic drop in sales volume in the first half of this year compared to last year. The estimated total dollar volume of $1 million plus commercial property sales in the first half of 2023 is down nearly 53% from the first half of last year. That is an astonishing number, reminiscent of the global financial crisis and the pandemic. But of course, the headlines don't tell the full story. First of all, for a variety of reasons, I prefer not to use dollar volume to measure commercial real estate activity. First, the composition of sales often changes. If the number of high-priced property sales changes, it can have an outsized effect. For example, when comparing sales in the first half of 2023 with the first half of last year, the total dollar volume of properties over 20 million was down almost 60%. Meanwhile, the total dollar volume of small property sales between $1 and $10 million was down by 40%. In addition, changes in valuation can amplify the effects. Property prices were at or near their peak in the first half of 2022, and they have since come down some. That also affects the dollar volume of sales. So rather than measuring the commercial real estate market in dollars, I prefer to measure it by transaction count. Using this measurement, the total estimated commercial real estate transaction count over $1 million in the first half of 2023 was down by 41% compared to last year. The hardest hit segment is still the 20 plus million price tranche, with deal activity down 56%, while the 1 to 10 million tranche was down by about 39%. In between, the sales of $10 to $20 million properties were down by about 50%. I do want to point out that the first half of 2023 numbers are a modeled estimate. We do not yet have a complete compilation of the commercial real estate transactions from the second quarter. That said, we also need to consider that the first half of last year was by far the most active half on record, with nearly 50,000 commercial real estate transactions over $1 million. To put that in perspective, the 10-year average number of transactions over $1 million from 2012 through 2021 was about 30,000 per year, which happens to be roughly in alignment with our estimate for the first half of 2023. So even though there was a dramatic drop in activity when comparing this year versus last year, when you look at the long-term trends, the first half of 2023 was about on par with the longer-term average. But the composition of those sales did change. Apartment transactions were 17% below average in 2023, with smaller transactions between 1 and 10 million down 19.4% from average. And while the 20 million plus apartment transaction activity were only 5% below average, they took a disproportionately large hit compared to 2022, down over 60%. Comparatively, the total number of office transactions over $1 million were just 9.5% below average, with the $1 to $10 million segment off by just 0.6% and the $20 million plus tranche down by nearly 48%. Small office buildings, particularly in the suburbs and in smaller markets, weren't hit nearly as hard as the headlines suggest. And even though retail property sales were down by 38.5% compared to last year, they were still 7% above the long-term average. The $20 million plus large property segment of retail was just 3.5% below the average. And then industrial, which was down 36.5% compared to last year, was actually 10% above the 10-year average. That said, the $20 million plus industrial tranche was down nearly 50% from last year, even though it was 30% above the long-term average. So, as investors, what does this tell us? First, commercial real estate sales activity is down significantly. The rapid rise of interest rates and economic uncertainty did take a toll. But the slowdown is a bit overstated by the media because they mostly cite dollar volume stats. In addition, The slowdown is disproportionately in the $20 million plus segment, dominated by institutional investors. Private investor activity also slowed, but not to the same degree as the institutional segment. As a result, private investors now constitute more than 61% of the total buyer pool, and that number is per Real Capital Analytics, which only tracks deals above $2.5 million. Presumably, almost all of the deals between $1 million and $2.5 million are being done by private investors, so the private investors' share is upwards of 80% of the transactions. For sellers, that means the most likely buyer candidates will be private investors. A significant portion of the REITs and institutions are still on the sidelines. For buyers, that means competition for assets remains less intense than it was historically, especially for larger assets. I believe the market has already started the price discovery process, and the expectation gap between buyers and sellers could begin to narrow later this year. As I've highlighted in past videos, times of uncertainty like this often bring some of the best investment opportunities. So as always, I recommend that investors look beyond the market of today and position for the future by keeping their eyes on the horizon.